The U.S. Treasury Department was hacked in what officials are calling a major cybersecurity incident by Chinese state-sponsored actors. Hackers allegedly gained access to Treasury workstations through Beyond Trust. That's a third-party software provider. A letter sent to the Senate Banking Committee, reviewed by Fox, confirms the actor was affiliated with the Chinese government and was able to access cloud-based unclassified documents. According to a Treasury spokesperson, quote, once Treasury was alerted by the service provider, we immediately contacted Cybersecurity and Infrastructure Security Agency, that's CISA, if you want to use the shorthand, and have worked with law enforcement partners across the government to ascertain the impact of this incident. The compromised Beyond Trust service has been taken offline. There's no evidence indicating the threat actor has continued access to Treasury systems or information. The breach comes on the heels of the White House disclosing last week that Chinese officials gained entry into the private text and phone conversations of American citizens. And this is not the first time we've seen this. And my next guest says, reports of the death of at least one cybersecurity stock, they're exaggerated. Let's bring in Landsberg, Bennett, Private Wealth Management CIO, Michael Landsberg. So you're speaking about CrowdStrike. Why are you a believer?
Yeah, sure. Part of the issue, I think, is it got punished in the summer, and it was an update. It wasn't really a structural problem with the program. It was the update. So the program works. In fact, the retention rates have been very strong. Stock got crushed after the announcement. It's kind of slowly climbed its way back, but it's one of the few that I look at with generative AI and all the things that are going to happen. Criminals are getting smarter. Criminals are going to be 24/7 working really hard. We're going to need to have these resources in place, and nobody's really stepped in to take CrowdStrike's place. I think you can own a lot of cybersecurity companies. I just think this happens to be best in breed.
Yeah, and those for investors, that's a good pick for those looking for, something that's kind of maybe a little undervalued at this point. AI, we've been talking about it not just all week, but all year. And that really, again, was the theme for 2024 for the markets. But is AI and the generational shift and the changes we're going to see in the technology going to be the story of 2025, or is it going to be something else?
I think obviously AI is I would view it as a generational opportunity. I think the mistake a lot of investors are making is thinking they only have to own, or they should only own chips to get that exposure. I think when we look at AI, we're looking at obviously the chips. Everybody owns the chip names, but a lot of the other things that are out there that make that happen, the electrification, copper, the cooling, the data centers. There's a lot of other stories in that ecosystem that make it work very well. I think that needs to be the story that people diversify within AI. Still have it as a major theme, but not just back the truck up only on chips, because as you can see, chips have done very, very well. It's going to be tough to repeat that in 2025.
Yeah, I mean, you said you like industrials and tech and financials. By the way, one of the things that caught my attention in your notes, headline CPI bottomed in September 2024 at 2.4%. You say it's going to go higher over the next 6 months. So you're looking for that inflation dragon not to be tamed. That's an issue for the markets. That's an issue for many stocks.
Yeah, absolutely. I think your last guest talked about looking at the trends. Well, I'm looking at the 3-month trend. The trend is higher. September was the bottom at 2.4. Then went to 2.6. It was 2.75 last month. We think it'll be 2.95 in the December print that comes out in January. In fact, I've got the next 6 months headline CPI going higher. In fact, actually, even the Fed's preferred, the core PCE number, that's at an 8-month high. Now, I don't think it's going to go back to the 2021, 2022 9%, simply because I think the energy costs are not going to go higher. This administration has talked about energy dominance, not just energy independence. I think it's going to keep pressure low on that. But I think inflation's going up. I think the Fed's wrong. And I think that's one of the things that you've got to look at, having a portion of your portfolio in companies that have some pricing power, because they're going to have to pass it along to consumers.
Yeah, no, I think, I read that you think the Fed is wrong, but also, and that they're incorrect. But you also say, and I think this is what kind of proves the point about some of the stocks that you like, and I know you like United Rentals and Royal Caribbean, but you say investors that prepare for higher inflation and higher interest rates by owning stocks of companies that have pricing power, as well as some commodity exposure, those are the companies that are going to get rewarded.
Absolutely. I look at a company like Royal Caribbean. The cruise line in general has a cheaper offering to customers. Everything else has gotten a lot more expensive. If you want to go to the hotel in the Caribbean, they're 25% more than a cruise. So I think people are going to look at that opportunity and say, okay, that's cheaper. They have some pricing power there, given also the fact that we think energy costs in the commodity complex are not going to go up. we think there's a lot of margins to be had in those cruise lines because they have that. That pricing power to raise things and to be able to bundle that together, I think is compelling for a consumer that is stretched. There's no question the consumer has done really well. If you've got stocks, you've done well. But a lot of the consumers are stretched. If they can find some value in the cruise lines for a vacation, they will.
Yeah, the why of why we're seeing consumer spending, why we're seeing these holiday numbers that look like they're going to be, above last year substantially, even with the additional debt that people are taking on, is an interesting dichotomy that we're seeing with the economy that's going to play out next year, Michael. So happy New Year. We'll see you next year.
Happy New Year.
All right.
Absolutely.